Everybody, welcome. We're going to talk a little bit of risk management today. We're going to look at the market, maybe look for a couple trade ideas. And I think what's very interesting, you should be able to see my screen. Um, let's start overall. Let's take a look at the market. And then we can dial into strategies. And if you look at the market, what do we, in a typical year, we might have 6, 7, 8 down moves that may fizzle out at 1 or 2%, like a tornado. Most strong wind currents, like I know what I'm talking about, I don't. Most strong wind currents don't turn into a monster tornado. And 95% of the down moves, if you look at this as a 1-year chart in SPX, you guys can see that. 95% of the downward moves do not turn into much, right? These are little down moves that are going near the 50-day moving average, which is around 44.38. And you can see every down move, we think it's going to be a correction, but how many corrections are you going to have in a year? This is very interesting to me. The last 5 weeks, if you see this, as we came off the highs of 45 in SPX, we went down to the lows around 6%, right? Which is a pretty good move. Now with the market coming back a little bit, we're down about 3.5%, but we've been in a 5-week downturn. SPX currently is at roughly 4,400 and VIX is 1871. If you would have asked me, hey, Dan, 5 weeks ago, if you would have said, hey, we're going to be down in a little bit of a downdraft for 5 weeks, I'd say 90%. If it's going to last 5 weeks, we're going to have a correction. And VIX will be at 30 or higher, and it'll be a mess. And we're not going to do a lot of range-bound trading. Well, it's been just the opposite. I mean, because when you look at the COVID correction down move, right, in 5 weeks, we were down hundreds of points. This is different, right? I mean, as of today, we're 145 points off the highs of 5 weeks ago. It's nothing, right? So this has been a very tradable downside for range-bound trades. Obviously, we have bigger candles, wider ranges in the market, but we've had pretty decent normal VIX ranges. Like the 6-week range has been like 15, 16 to 22, 23. We've been in a normal VIX range, a bit of a range here, a little choppier, but it's been very tradable. And I think our community, a lot of people in it have done fine. One of the nice things with like calendars and butterflies, you get a lot wider range in these trades. So it's worked out pretty well. We're still under the 200-day, the 50-day moving average by about 30 points. You got the Fed minutes coming up next week, which could be potentially maybe a little dicey, but this is very tradable so far, right? Again, this has been a 6% down move as of around middle of September, and then it's kind of fizzled here, but it's been, most 5-week downturns aren't as tradable as this. That's my observation. Very normal VIX range, very normal in the range, 1622, 1623. ATR is starting to come down a little bit. That just measures the distance between the high and the low of SPX. The wider the range, and you can see over the last month, ATR has been going up, and that just simply means that the ranges have been wider. So you say, well, wouldn't that make managing range-bound trades harder? Yes, but with the higher volatilities, you've got a lot more room to your break-evens in these trades, so they've been more palatable, if I could use that word. What am I looking at now? We're kind of in that, 18.74 VIX. You're kind of, you can go either way, long Vega or short Vega. Let me just say one thing. The way we look at the world in Sheridan Mentoring, more 3 parts of a portfolio. So, you may look at long portfolio, income, which is range bound stuff, and then spec, and then cash. So if we were managing 50K portfolio, we may different times, different percentages, but overall, the types of percentages we may do, at least in our community, it might be close to 50% for income, 30% or more. I mean, that might be low for some people. Long portfolio, spec, 10%, cash, 10%. And again, you could tweak these percentages, which we do. Long portfolio would be neutral to bullish that you'd put on all the time, covered rights, cash secured puts. Well, those are going to eat up a lot of capital. So we would do long as substitutes for both of those. Long diagonals, that's a covered right substitute, much cheaper, better yields. And then wider, I'll call it wide put credit spreads. That's a lot better yield than doing cash secured puts. But those are all neutral to bullish. We do a lot of put credit spreads in the SPX. That would be long portfolio. So there'd be an intentionality of 1 to 2 of those per week. The income, that's a little more range bound. That's where you've got your things like flies, calendars, single and double calendars, iron condors, double diagonals, more range bound stuff. And typically in our range bound stuff, we only stay in these trades about 20-25% of the duration. Spec would be just as it says, spec, but you can use calendars, flies in a directional capability. Calendars, flies, single options. You can buy or sell puts, right? I'll call it singles. You can buy vertical trades, right? Or sell vertical trades, a little more directional. You can buy leaps, buy stock, right? That's all, or no, excuse me. No, that would be buy leaps, buy stock would be more in the long portfolio. And then have some money in cash for opportunities and stuff. And you can raise that percent more if you want. But that's the overall how we look at life. It's Sheridan Mentoring. And just to note before I look at a strategy, this coming next week is the last week of our 3K class that we've been doing. And the 3K class, next one we'll be doing our October 3K class will be starting soon. And you can check, come to Sheridan Mentoring, or Johnny might have some links that you can click on. But the 3K class be a great opportunity. We've been doing it since June class, July class, August class, September. And the September has been a little rockier, but we've made money in each of those months. You learn, we put live trades on. I think it'd be a great opportunity for you. The whole foundation of this 3K class is trying to make 3K on 25K, right? For beginners and stuff, you're going to work on $300 on 2,500 and then work your way up. But our goal is 3% a week, 12% a month. And the whole thing is based on turnover, right? If you're using trades that have an expiration of 14 to 21 days, and we can get them off, right? If we're putting our classes Tuesdays and Thursdays. So if you put whatever the trade, if you put a fly or a credit spread on Tuesday, and you put, let's say, a calendar or something on Thursday, and you can get them off in a week, right? That means you can put 4 of these on each month. So with that turnover, you have a much better chance to doing, when you're dealing with 14 to 21 day trades or 10 to 21 day trades, these numbers are not, they're very conservative, but you're putting 4 trades on whether it be 4 flies on each month and 4 calendars, or 4 credit spreads and 4 calendars. So you're turning the inventory over on the same capital. Whereas if you did like a 60-day trade, you're not getting it off in a week or two. So you're not going to be able to turn it over as much. And so, but the fundamental thing of the whole class is just we're putting these live trades on together. We're going over the risk management, a lot of learning. So just to let you know about that. But as far as today, again, one of the things that's nice with a little bit higher volatility, not that 18.72 is really high, but let's just take a look at here'd be an example of a calendar trade. Just look at one trade here. 40. So if you look at where the SPX is right now, where we speak, around 4,400, right? Let me make sure I've got the right strikes in here. There's a couple ideas. So if we put a calendar on at 4,400, there'd be an example of one. Be about 2 weeks out on our short option. We're buying one OC 27, selling one OC 22, 4,400 call, and that's going for around $7.90, close to $8, so $790, $800. And what's nice is we're looking, this space in between the break evens is where we're looking at our profitable ranges as a general statement. And when the volatilities are a little higher, I mean, again, they've come down quite a bit the last week, but we're still better than 15 or 16, which we were about 5 weeks ago. But you can look at the break evens are about, let's see, 43, where are we at here? Close to 43.35 area, 65, 70 points. Let's see, on the downside, 45. We get about 70 points to the break evens on each side. And so that's why we like to stay in these trades about 20, 25% of the time, because the probabilities are, if this is a 2-week trade, 14 days, we're not going to be in this more than maybe 3 trading days. So the probabilities of going outside these break evens in 3 days isn't high. So this is the universe that we're playing in these days with the calendars. So that'd be a possibility. Anyways, and in the class, we'll be talking about calendars, butterflies, credit spreads, different trades you can do. And the wonderful thing is we're putting them on live. So you're getting the practical experience, you're learning, you're doing it. We're trying to help you become independent craftsmen. So we'll see you in the next week. And you can go to our website, Sheridan Mentoring, and sign up. Thanks, everybody.